Well, with the collapse of the housing market, there has been a 26% increase this year of mortgage fraud on increasingly desperate homeowners. Drew Dargen from DyerBeech is here to talk about how you can avoid getting scammed. Drew, good morning. Thanks so much for being here. We
appreciate you having me.
All right, so mortgage fraud, what are the most common types that people should look out for?
Well, the biggest thing that you've got to keep in mind, mortgage fraud is simply a misrepresentation, misstatement, or omission of some form of information that a loan underwriter relies on to qualify someone for a loan. So there's a couple of different types of loan fraud that are pretty pervasive, one of which is called fraud for housing, the other is called fraud for profit. So fraud for housing is actually only about 20% of the whole mortgage fraud issue, but it's a homeowner kind of lying or omitting information on their loan application to get qualified for a property that maybe they shouldn't be qualified for. The rest of it is, about 80% of the fraud is fraud for profit, which these industry insiders, appraisers, loan officers, brokers are committing to get people into homes that they shouldn't be in, or to increase their bottom line, increase their revenue on a particular loan.
And is that essentially the core of what happened with the subprime mortgage crisis?
It's definitely a big piece of it. There's a lot of brokers, a lot of loan officers that are really kind of technologically ahead of the game with computers and getting in there and changing things on credit reports, changing things on loan applications, income, anything they could do to get a loan through, they were doing it.
What's surprising is that it's actually up 26% this year, because you would think that a lot of this fraud happened in years past, causing the crisis in the first place. Why is it up?
Exactly. What's interesting is because of this whole, sort of bursted bubble in the housing market, what you're dealing with now is a much smaller box with lenders. So their guidelines have really restricted, so they're able to avoid putting people in loans they shouldn't be in. But now that it's harder to get a loan, people are more likely to change the things around to actually qualify for something like that. It's very interesting.
Okay, so you're out there worried about it. Number one thing you should do to make sure it doesn't happen to you?
Absolutely. Number one thing, in my opinion, make sure you're using a professional that you maybe have been recommended to by friends, family, coworkers, people you trust. Number two, ask for written information. Very, very important. You need to know exactly what you're getting into. Number three, don't ever sign something that is left blank. Make sure you know exactly what you're signing. Number four, really understand your loan documents. It's very important. If you don't understand how to read through the entire group of documents, sit down with a professional that can help you out. And lastly, most importantly, if it sounds too good to be true, it really probably is.
But how do you know that you can trust the person? Are there places that people should go that are maybe free, or places where people can get help?
Absolutely. There's a lot of people out there. There's a lot of organizations, the Mortgage Brokers Association. There's a lot of national organizations that you can ask your loan officer or your broker if they're a member of. Or another good thing is to go down to your local bank, go to your credit union, someone you've been banking and keeping your money with for a long time, and talk to someone there, someone you can trust, you've got more experience with.
And on this topic of mortgage fraud, even if you personally have not experienced fraud, the fact that your neighbor down the street experienced fraud could majorly affect you.
Absolutely. Something we talk about a lot, a ripple effect. You've got people who have gotten into these homes that maybe they couldn't afford. Prices have gone down. They can't make their payments. So there's a lot of foreclosures, short sales happening, and that affects everybody. One house sells for $100,000 less than it should sell for, and the rest of the neighborhood automatically sees their homes going down as well.
And so the ripple effect, it sounds like, of increased regulation is increasing cunningness in finding a way around it?
It's very interesting. You would hope that they would put some measures in place to really, really, try to catch these things. I think they're trying to improve it every day, but, people are trying to make money. It's a tough time, and people are trying to get into loans. They've got to do what they've got to do, I guess.
Well, we hope we're able to wake some people up to this issue and
Absolutely.
get them some help. Thanks for being here.
Thank you for having me.
Of course, find more information about that at DyerBeech, and also go to our website, san diego6.com, and click on Hot Topics.